Welcome to our Twitter Spaces. This is the last one for this year. Our speakers are here, so we may start with Kevin and Senga and then come back to Ruben and Kwame later. So start off with maybe introducing yourself. Let's start with Kevin. Tell us about what you do day by day.
Thanks, Eric. If you all can hear me, good evening to you all. My name is Kevin Mainangige, and I'm currently heading the equities desk at Jenkins Capital. I've been in the market for more than a decade now, having started off earlier on at Genghis. Then I think my longest stint was at Equity Investment Bank, which was then a joint venture with Exotics based in London, where we handled both equities and fixed income. Thereafter, I moved to NCBA Investment Bank and finally came back home at Jenkins Capital, where again, as I mentioned, we do all so derivatives, equities, fixed income, you name it. I'm happy to be here. So maybe mine will just be a touch on equities and things we've seen throughout the year, and probably my focus for the year 2022.
We'll come back to you on then you can give us a lowdown of the market. June, you can introduce yourself.
Hi, Eric. Thank you for inviting me. For those who may not know me, my name is June Odongo. I am CEO of Senga Technologies. We're a logistics company operating from Nairobi, serving businesses across Kenya. We mostly focus on intra-country trade, so moving goods for people who trade from virtually anywhere to anywhere in Kenya, with a particularly specific focus on retail. Thank you.
Ruben, you can tell us what you do and introduce yourself.
Thanks. My name is Ruben, and again, thanks for the invitation. I'm an economist. I work in econ and finance. On work capacity, I'm the Africa Regional Coordinator at UNEP Financing, the arm of the UNEP that works on sustainability in financial markets. So we lead efforts in investment sector. Yeah, so I lead that for the Africa region. And I must say I'm a big fan of Mwango Capital and happy to be here.
The structure of today's conversation is a little bit of a reflection on 2021, a little bit about markets. I think Kevin will give us a lowdown on what happened in the markets. And then we'll discuss a little bit of the challenges maybe small businesses are facing with June. And then Ruben and Kwame will be joining us later. Will also give us a macro perspective. And then as we head into next year, what kind of like the points. It's a bit of an open discussion. So if you really want to speak, especially in the second hour, you can request to speak and come and have a conversation with us. A lot of events have happened this year. We actually launched Mwango Capital this year. We just hit 10,000 followers, I think, last week. So it's quite a milestone for us. So reflecting on the year, it's also been a really good one for us. But maybe not most small businesses can actually say the same. I would want to start first with the markets, kind of low down on what happened in the markets. Kevin, maybe you can tell us a little bit about that.
Thanks, Eric. So the NSE really outperformed many investors' expectations, especially on this period of the pandemic and the ballooning. Just as a brief background, of course, the NSE was started in 1954, and we saw the demutualization of the exchange. So that meant that the NSE could list its shares on its exchange back around, I think, in 2014. We have a couple of indices so that measure the market performance and good for index-based funds. So we have the NSE All Share Index, popularly known as NASI, that it's a market capitalization weighted index. We also have the NSE 25, we have the NSE 20, we have the NSE coming together with FTSE to create the FTSE Kenya 15 index, and we have the FTSE NSE Kenya 25 index as well. We have around 65 listed companies. Of course, the biggest one, as you all might know, is Safaricom. We have all the main banks listed, agricultural stocks, investments, allied, and so on and so forth. If you look at the NASI, the all share, it's weighted and based on 100. So having started off in around 2008 at 100 as the base, we are now, I think we're close today at around 164 and around 1800 on the NSE 20. So I think the biggest performer or the biggest stock that most investors and analysts have been watching during the year has been Safaricom. Of course, the biggest news moving into Ethiopia and thereafter subsequent news of Tigray happening. We saw a jump in the share price earlier on during the speculation and when the news was finally announced. having gone to levels of 43, which were the all-time highs in Safaricom. And then thereafter, as people, of course, digest the news and noticed it was becoming harder and harder to do business in Ethiopia with the ongoing conflict, we saw the share dip to around 30, almost 35, 60, and now we're back to our levels of 38. So there's still room for that. We've seen, of course, the banks, the top banks, especially Equity and KCB, perform, I think, most of the other stocks, and a bit of Barclays and ABSA here and there. The agricultural stocks, of course, we've seen Kakuzi, a very good performer, in Limuruti, despite the illiquid nature of those stocks. And on investments, I think we've seen Centum performing the rest. So mine is brief. I think if anyone has any questions on any of the stocks or the market in general, can shout. Under the NSE, we have 4 main segments. We have the main investment segment, which I think most of the investors are aware of. That's where your big market cap stocks are listed. So your banks, your Safaricoms. Then we have an alternative investments. Then we have the growth investments. And we also have a program, which I think some of you might be aware of, called the Booker program, where small and medium-sized companies are brought, incubated, and when they're ready, that we're talking about refixing the organizational structure in terms of bringing the auditors, looking at the board, the executive, and then once they're ready to come to market, then they list onto the GEMS program.
So perhaps a question that we want to do, so this is the year companies at the NSE also decided to do share buybacks. So maybe a little bit of context and what companies have done so far in terms of what a share buyback is. And also generally across the counter, except Safaricom, you find like most companies haven't done so well this year. So like what needs to happen for them to be shaken up a little bit, especially heading into an election year?
I'll start with your latter question. So one thing to note about the NSE is it's a market that is supported north of 85% by foreigners. So you'll find that almost every specific day you'll have foreigners doing 75% of the purchase or sales. And then the rest is split between retail and local institutional investors. And I'd count that as also ESG investors. So whenever you see a big move in the market, say we're talking about 1.2 billion cash in turnover, you'll always find around 800 to 900 million Kenyan shillings of that is foreign investments. So what happened is earlier on, of course, when the world was getting a grip, and I'm talking about, well, the world had already gotten a grip of the COVID and everything that was happening. And of course, that hit us since we see the FDI flight. So we see the capital flight out of our markets and country in general back to safer havens. And they're talking about the Western countries. In addition to COVID, I think one of the other things that has really hit NSE in a way is what is ongoing with our neighbors. So you look at in Tanzania, of course, and might I first note that Kenya is the biggest market in East, I think, in Central Africa. So earlier on, we saw, of course, the Tanzania lose their president, and there was quite some uncertainty around who will be taking over. There were rumors about parliament not wanting Suluhu, so that also was a concern in the region. If you move up north to the Horn, Tigray has happened in Ethiopia. Eritrea is not all that stable. Then came the Sudan coup. There was Somalia, and the citizens or residents there debating the results. Once you move again to Uganda, you'll see that now some of the military guys in Uganda have invaded the organized groups in Congo. I think the only market that we've seen quite some positive sentiment on has been Rwanda, with all the tech-led innovations over there and foreign direct investment. So Kenya, despite being quite peaceful, we know the election, yes, is coming next year. We haven't seen much of the campaign. I think that's going to get heated around January, February. And that's when we're going to really, and we'll talk about that later on how we expect the market to perform. The general consensus is, if you look at the last 4 or 5 years towards the election, and we're talking about Kenya, towards the Kenyan election, is the market has actually, we've seen quite a balloon or a bump in turnover. And we've actually seen quite some good numbers, even when you look at the benchmark indices, the NSE 20 and the All Share Index. So there's debate about that and how the election is going to be in where the share prices will be. But again, generally throughout the year, we saw some ups and downs. We saw some periods where the market was sort of stagnant. And by that these were periods where the market was neither moving up or down. And if you look at, say, Safaricom, which accounts for around 59 to 60% of the total market capitalization. So if there's no movement on Safaricom, then you expect the market generally to be lull. And if I go on and add stocks like KCB and Equity and East African breweries to that, then if there are no movements on those, generally what we call the blue chips, the rest of the market, there's sort of a lull in the market. And that's when you see some retail investors going to trade weird stocks, like you'll see guys trading, Limuruti, 100 shares of that, or Kakuzi, or Monero Business Ventures, and such, and so on and so forth. So another question that I've been asked generally is, someone says, okay, Kenya Re is up 10% today, or Monero Business Venture is up 10% today, or Portland Cement for that matter. And they're like, okay, so what's happening in these companies? And one of the things I've always told investors is, don't just look at the stock was up 10% today. Also check what is the size traded. That's the volume or the turnover. And that can easily tell you if it's just retail speculation or just someone doing some shady business. But generally, most of the foreigners we're talking about are only on the blue chips. So we're talking about the main banks and Safaricom. And most of the institutional investors tend to sort of copy what the foreign investors are doing. And that's when you'll see that if something significant happens, be that COVID or election or whatever is happening, foreigners will sort of take a wait and watch approach. And therefore, you'll tend to see local institutional investors and ESG investors, which most are domiciled in Uganda, also tend to keep off from the market. And that's when we start seeing more of inflows in fixed income assets and so on. So I don't know if I've answered your latter question. Going to the buybacks, it was a first for us in the country. I think we saw that with NMG, and there are now talks with Centum doing that. So the CMA, together with the NSE, which is a self-regulating organization, or SRO, amended some of their acts and allowed for some of these things to happen. And there are more coming in the market. And it's not just the share buyback. We've seen a couple of initiatives, including the day trading. People ask questions for what is day trading and how does it work? And we'll get to that. We've seen day trading, and now there's share buybacks. And there's one more. I don't know, I've forgotten that one more. I'll come back to it. So on share buybacks is generally the companies that have listed the shares coming back to the market when the market prices are conducive for that specific share. Say NMG, for instance, they listed a share, say at, for instance, 10 shillings 10 years ago. Over the course of the market, over the course of the years, the share has gone, say, to 25, 30, 40 maybe. And then something happens, be it the numbers, be it the just general market sentiment, and the share goes back to 18 shillings. So the company sees that, okay, this share, if you look at the fair value of this share, it's around maybe 32 shillings, and we are trading at 18 shillings. That's almost half of it. So it would be conducive for the company to come back to the market, to the shareholders, the owners of the stock, and say, okay, we're going to buy this share at 25 shillings. And you find they've given you a 10 or 12% premium to sell your shares. So they can buy these shares, hold them, and when the prices recover, so north of 32 shillings, which was their fair value, they can always come back to the market and resell this or sell it to a strategic investor. So that's essentially, in a nutshell, what share buyback is. And we've seen that again, as I mentioned, from Nation Media Group and Centum are in talks to also conduct theirs. If we are talking about Nation Media Group and Standard in particular, the media has really been hit on the NSE, in part due to, of course, their clientele has moved to digital channels. The print press has really suffered. Not many Kenyans nowadays buy newspapers. Most of us who work in offices will go and you'll find one newspaper per office. Our parents who used to buy the papers, most of them no longer buy it, or a few of them buy, but the majority of the new consumer, the youth, will generally absorb news via digital channels. So some will, yes, subscribe to their digital channel subscriptions and pay the 700 shillings per year to receive, for instance, a Nation newspaper. Others will receive news via alternative channels. We have Twitter, we have Instagram, we have Facebook, you name it. And so it's become really struggle. And not most of us, again, are watching or consuming television and such shows. So it's become a really, really big task for print companies and generally media companies to break even. Someone who works in the media industry was telling me the plan for most of these media, and Citizen in particular, is they've now focused on creating a local TV, or those quote-unquote tribal TVs. So if you're in Nyeri, you create an Inoro TV. If you're in Kisumu, you create a Ramogi TV. Basically, traverse throughout the country, because the idea or the reasoning behind it was, if you move to the cities, you're talking about your big cities, is most of these clients generally don't watch TV. So TV viewership is higher mostly in rural or semi-urban areas. And that, of course, advised their reasoning to just create these TVs in those areas. The other reason, again, why they're creating some of these channels outside Nairobi is, and someone was telling me, was instead of bringing someone, if there's a hot news, say a breaking news or something, it becomes harder to bring someone to Nairobi to interview them if you want to do a big interview. But if you create a local TV station, say like the Ramogi, then if you want to interview Raila and is domiciled in Kisumu, it becomes easier for him to be interviewed at Ramogi, and then they can mirror that back to Nairobi, more of what KTN does. So they have their two stations, one, the main one at I&M, and they have the other one on Mombasa Road. So if you're on that side, or say even Mombasa, and you're coming this, you don't need to get yourself to town for that interview or wherever. You can just do it at Mombasa Road, and then can just be mirrored back to I&M in the CBD. Eric, have I answered your question?
Yes, I think now I'll switch over from markets to maybe small businesses. June, maybe you can tell us a little bit how your experience has been. It's been like the second year now, the pandemic. You can tell us how your business is doing and what's kind of how small businesses generally are doing around you also in the logistics business.
Okay. I'll try to be concise, and then you can just ask me follow-up questions if you like. As a business ourselves, we've done well. This year we've grown, notably since last year. However, I'm not sure that's necessarily representative. We are a small business, and it's one of the situations where we kind of have no option but to grow. We work primarily with manufacturers and retailers and traders. And I think even before the pandemic, we started to see a notable slowdown, particularly in consumer goods, including even food. I should also say, our company started in 2016, so we have not actually operated in a thriving economic environment. From the business perspective, we don't have an experience of a good environment, because when the year we started was just ahead of an election period, and we're going into another election period. And in terms of transportation, what we do see is dips begin to happen even before the election period itself. And I think that has already started to occur even in 2021. So the pandemic, I feel, accelerated an already shrinking economy and started to push down or push out businesses that were beginning to struggle or were struggling. We've seen a number of those in different areas. I've seen struggling companies in food, like basic food, even things like flour. Have seen that in events companies. So just general shrinkage. And in terms of companies that we've seen sort of go out of business or goods we've moved less, I would say a lot of small companies sort of have shrunk or just disappeared completely. And big companies that had some resilience or experience in the market, some of them ended up thriving a little bit once companies started to go out of business. Another thing we've seen that I think is worth mentioning is before 2021, Senga had never had any bad debt. Like, we've literally never written off bad debt from a customer. For the first time ever, we will have to do that. Our aged receivables have been increasing. Like, people used to pay us within 1 to 2 months, and now we see people paying us 4 months, 5 months, 6 months. So that's a big concern. We've even had to do things like, for example, just stopping to serve people until they pay us. So I would say that's sort of like a widespread kind of trend in terms of difficulty in meeting payments, I would say across the board. And I would say we encounter that more so actually, I think, with bigger firms. Not exclusively bigger firms, but with bigger firms. And then, of course, there's things like increase in price of fuel, the supply chain issues, just the global ones that are being experienced everywhere in the world and trickling down here as well. I imagine people know this, but the cost of, for example, shipping containers from abroad to here has increased by many, many multiples. So there's increase in cost of international transportation, particularly importation. And then there's the supply chain delays that were happening. So things getting stuck in different ports, not just locally, but internationally. So that means it takes long for traders or businesses to obtain or acquire raw materials. The costs have increased to bring them in. And then there's lots of pricing pressure in the goods that are, produced with these materials. What is happening though is that in spite of the cost of petroleum going up, and it's been going up for quite a while, and the cost of transportation going up, prices of goods are not increasing in tandem with that. We, as transportation providers or service providers, as well as the manufacturers and traders themselves, are having to absorb or having to suppress margins. Like everyone's trying to cut down costs as much as they can, but also taking in lower margins because increasing price will lead to restricted consumption. So that's, I think, another interesting thing that has happened this year. We have completely been unable to increase price just to keep not just the economy going, but keep ourselves going. Yeah, let me leave it at that. And you can ask me follow-on questions if you like.
All right. Maybe to follow up on that, how was business like before the pandemic? And maybe from the businesses that you're seeing, what kind of strategies are they using maybe to survive this very difficult time? And what needs to change? And at least, especially from help from other businesses and maybe people in government who may be listening in terms of trying to help small businesses survive these difficult times or so?
I feel we've seen different tactics with different companies, including our own. Before the pandemic, there was already a slowdown before the pandemic. So my view is that the economy was shrinking anyways. I mean, one of the things I found interesting was that, without naming the firm, like one of the biggest, like rice producers and so on, they had started shrinking around like 2018. And we saw that in a number of other places. So at least where we're sitting, the pandemic has just accelerated that trend. It did not introduce it. We've been in a bad economy for a while. Again, like in our case, we've grown. And we do have, for example, customers that have been growing during the pandemic period. And I would say almost exclusively, they are sort of like the best run companies that were able to sustain, for example, the demand shocks that happened when the pandemic began, and then just came out with a bang once curfews and so on lifted. And so I don't want to say sort of took over, but kind of took market from folks who had slowed down. Because when the pandemic happened, I remember some businesses actually just shut down and they said, we don't have enough demand to stay open. So some people just stayed closed for a while. Right. And for those who stayed open or took that time period to adapt and even improve their products, we're seeing that they're the ones actually towards the end of the year now that are doing significantly better. I think many of us would agree that the government is pretty unfriendly to businesses, particularly now where a lot of accommodation is required simply because all kinds of costs are going up. So, for example, even with the collections problem that I was mentioning, regardless of whether someone is paying us or not, we have to pay our VAT. The VAT has to be submitted on the 20th. And if you don't submit on the 20th, on the 21st at between 8 and 9 a.m., some carry person is going to email you, right? Just the government taxes themselves. So they create some kind of cash flow problem in an already very restrictive cash flow environment.
I think especially with government, you're going to come to that. I read the interview with the KRA chair today, and I think he's still very keen on roping in even more people from the informal sector into the tax brackets. So I feel like reprieve may not be coming anytime soon, especially from the KRA. So I think we'll discuss that as part of the macro section later. But perhaps maybe one thing I wanted to ask you is what kind of best practices have you seen around in terms of running your own business, and maybe mistakes you've made that you'd like to share, especially this year, that you've learned from, so that others, as they set up their own businesses, also can also incorporate that?
Oh, that's a tough question.
But I like asking tough questions to you.
Yeah. What kind of mistakes have we made? I mean, I think if you'll allow me, I'd also talk about sort of some good calls we made. I think in terms of mistakes we made, I think being tentative. I think Senga has sort of tentative for quite a while. Like in our case, we have a good service, a good product that people like, but we were always afraid of growing. Well, I don't know if the right word is afraid. But I don't think we gassed up things in the way we could have. So we kind of took too long thinking about capital. Should we accept external capital? Okay, who's going to give us that capital? And I think we could have just had, I think, more faith, or even if we had faith, I think like put our money where our mouth is as far as faith is concerned. So I think I would tell people to just not be tentative and to go for it. Time is money. I can say, for example, for a long time, we're just very, very cash constrained, even though we had a profitable business. And when you're very cash constrained and you're just wondering how you're going to survive day to day. So, for example, there's work we simply couldn't accept from customers who wanted to work with us because we didn't have money to finance them. And then we also have very strict credit requirements. So, for example, in our company, we do not work with anyone who cannot pay within 30 to 45 days. But once upon a time, it was 2 weeks to 30 days, right? So it made us sort of inflexible. And then, you also sort of get tired when you're worrying about money all the time. Your decision-making capacity sort of deteriorates, at least mine did, because you're worried about day to day instead of thinking a bit more strategically. In terms of good calls, for me, I definitely saw the pandemic as an opportunity. Again, Senga has not existed in a thriving economic environment. So for me, the way I looked at it was, what do we offer that people will want in the pandemic? Or what have we learned so far that we can extend as a service in the pandemic? And with the thought that if we can do well, not only in a strained economic environment, but in a pandemic, then we will be fine moving forward. So specifically around trying to figure out, for example, for customers, cost-effective means to move things in this, what we're experiencing with very high costs and so on. So I would say for us, I think we've done a decent job of that. And I'm looking forward to what we will meet on the other side of the pandemic. And I would say also with our clients who we're seeing have done well, they used this time period to, for example, just market in spite of low consumer demand, innovate with, better food products. We move a lot of food. And we've seen people improve their products, increase the range of products, and they seem to be the ones who are doing well now, even though we're still in the pandemic.
You have a unique story in terms of you studied abroad and then you came back. The key question is, why would you come back to Kenya when a lot of people would prefer actually to be out there and stay out there?
Okay, that's another question I didn't realize would be part of this topic. Why would I come back? Okay, so first of all, I should say that I didn't sort of like plan to come back home. I used to want to come back home a long time ago, around 2007, 2008. At that time, I had visited home and I was caught up in the clashes in two places, in Banana and in Kisumu. And it sort of threw off my intentions of coming back home for a long time. And when I did, which was at the end of 2015, I just happened to be coming home for the holidays. And my mother was born on Christmas Day. And we were going to have a birthday. And I had just quit my job because I had wanted to start something. And I was like, well, since I'm coming home, why not just give it a try? So for me, it was an experiment. I was like, okay, I'll give myself 6 months to come up with something. And I had been thinking around like logistics ideas and other business ideas in different environments in different countries. So then I just sort of switched the context and I was like, okay, what would make sense here? And I said, okay, I'll give myself 6 months to figure out something. And if I don't, I go back. And if I figure it out in 6 months, then give it another 18 months. So it was sort of just time based, but it wasn't like come back to Kenya sort of thing. Okay, why wouldn't I go back? I wouldn't say I wouldn't go back. I have to say Kenya is super, super, super hard. I mean, sometimes I wake up and ask myself, what was I thinking? It's a very, very difficult company to operate in or even to start a business. Small things like the fact that you have to have an office even when you're starting something because people don't want you to be a briefcase company. We're very, very low trust and it creates a lot of strain and things take many times longer than they do in other developed economies. That said, I'm an extremely entrepreneurial person, so it was going to happen no matter where I was. In the US, the context would have been more like improving perfection, right? So we'd be coming up, yes, with nice products, but they're not necessarily like game changing because it's already an environment where things sort of mostly work well. It's not to say that things don't work well here, but they do work well better there. Over here, I feel any impact that you make is very, very tangible and very rewarding. And that's at a lot of levels. It's from just the employment perspective, for example. We work with a lot of young people. Most of our team has primarily been fresh college graduates. And you imagine for them, okay, what would I have liked if I were 22 or 23 in a workplace? And do we have an opportunity, for example, to begin to set them up financially so that in the future they have opportunity to experiment and not be locked down to certain professions? And then even from like a service perspective, like for me, some of our customers produce products that I have used since I was a child. And I literally love our clients. I think all businesses everywhere are relationship based, but I just feel like here the impact is just more tangible. I don't know how to explain it. And then I also think just the opportunity, even though we're relatively a small economy, I think the opportunity is larger. There's just a lot of green space, and what one needs, I think, is resilience. Yeah.
Perfect. One final question before I switch to the macro would be for someone considering to start a business, what kind of considerations would you maybe share with them from your experience on what they should really think about as they start businesses in terms of all the reflections that you've had in running your own business in a pandemic and growing it and being worried about cash flow? What are some of the tidbits you'd share with someone starting off or thinking of starting a business?
Okay, I love this question so much. So I am a huge believer in Lean Startup. Everyone who comes into a company is required to read Lean Startup. And there's also something I recommend called 4 Steps to the Epiphany, which is the parent to Lean Startup, which is just a way of thinking, like very lean in terms of how you're coming up with a product and not just whether it's the right product, but who will consume it. And it's effectively a process that if you follow, you're going to fail fast or pivot, which are the things you need to do in a startup. So I believe very much in experimentation, but experimentation in a lean way that is not wasteful. So for example, Senga bootstrapped for the longest time. I think we bootstrapped for 4 years. I don't necessarily recommend that because I mentioned, for example, like when you're broke, it really affects your decision making. But because we bootstrapped, we were able to make sure that we had a business model that was going to work. So we were not putting money behind something that was loss making, for example. So I'm a big believer in starting small, finding out who your early adopters will be, getting quickly to a profitable business model where you're not maybe going to burn cash for 10 years or something, saying you're still trying to figure out profit. When I get asked this question, I literally will send someone or ask them to find 4 steps to the epiphany and just follow it. And I promise they will see an outcome. Again, not all businesses can be built lean. If you're building like a nuclear power plant or something, that's not the way to go. And then in terms of just building a company, like in my case, for example, and you may know this even though we haven't known each other for very long, I'm very sensitive to people and I'm very sensitive to alignment. If I just get a red flag about someone, I will not work with that person. And that's true whether it's from an investor perspective or even a client. I think building businesses is so difficult that if you can see something that potentially will bring you trouble down the road, just stay away. For me, there's certain things just that simply do not have a price. And for us now that we're beginning to take external funding, even though it was very difficult, for example, coming up with an investor list or even zoning into the right person because of sort of the quote unquote strict requirements for who they needed to be, it's borne fruit for us because right now the people we work with, we're very long-term focused. Senga is not, for example, like a financial instrument or pyramid scheme kind of startup. We're in Kenya, we're in an African context that is difficult, but also has a lot of opportunity. Are you willing to put in even 10 years to grow this? So I think alignment for me is extremely important. And also, if you just have a negative feeling, just trust yourself, even if you're questioning and think you might be wrong. In terms of team, I don't think we've necessarily nailed this. I have to say, because of the emotional strain of building a business, I would say, for example, I'm not the manager I imagined to be. And in fact, I was a better manager before I started a business because my identity is or was so tied to the business that there's an emotional response, which I don't think is the best thing necessarily from a CEO. But I do believe in building the kind of company that I've always imagined or wanted to build. The way I think about this with Senga is like, I don't know if there's necessarily going to be an opportunity for another business. So the first time we're doing it, why not just try to be the company we would have imagined? So that means also not necessarily conforming to status quo. For example, right now we have this discussion back and forth in our company around contracts and like laws. For example, I don't believe in like 21-day leave, right? But it's the law. And I'm like, but people should take time, whatever time they want to take. And HR says, no, you have to put in 21 days. So it's like, okay, how can we build a culture where people know that they're free to take time off when they want to take time off and not be restrictive? So yeah, one chance, go for it. Be lean. Don't waste other people's money. Figure out quickly whether you should fail and adjust quickly, and then invite other people to join you.
A quick one from our teammate here. What does Senga mean by that?
Oh, good question. So Senga means to ship or to transport in a Zimbabwean dialect called, but in Uganda, it is the auntie who prepares women for their husbands when they're getting married. But we didn't know that until we had secured a URL, so it was too late.
Now I'll switch to the macro section a little bit. I have Kwame and Ruben here. So Kwame Karibu and Ruben Pia. So I'll start with Ruben. Maybe you can tell us a little bit about your observations this year. And I know you're keen, especially on ESG. So maybe you can talk about the trends that you've seen around East Africa and the world over in terms of ESG and reflections on this year and going into the next year also.
Thanks, Eric. A lot has been happening in the macro space. And the first caveat, anytime I talk about the economy, is that the economy is what is happening or everyone is experiencing, and not really the headline numbers, because it's very easy to, get lost in what is being reported in the newspaper, in the news, and all that. But the first one I want to mention, because I was discussing this with a friend, is I'm sure many of you have had a chance to look at our exchange rate movement. We are now at 113. I don't know, Kwame will tell us where we'll potentially close at. And that has been a lot, especially just listening to June talk about working with manufacturers. And I was just thinking what that means for everyone who's importing and using all these import goods, which they need to use for manufacturing. Yeah, I know it's a random place to start, but that has been on my head today because I had a discussion on the exchange rate. Just looking at growth, we've just had the Kenya Economic Update 1 or 2 days ago, saying that in the last year, at least in the first half, we rebounded in terms of growth, hitting 5.3% in the first half, at least going to pre-pandemic levels. I think for me, the observation at least I make of the economy, and just talking to people, I like talking to traders a lot, whatever type, as long as someone is a trader, I like engaging. Is resilience. My feel has been, at least for the last 2.5 years, the Kenya economy is very resilient. Sometimes it takes a beating. I think there have been 2 moments this year which I think were particularly bad in my observation. I don't know if you all remember that there was the announcement of the lockdown just before Easter. I think for me that was like a break point, because there seemed to be a little bit of asymmetry between citizen sentiment and expectation around policy, what would happen, and what ended up being announced. Because I know a lot of businesses were not liquid, and they had said, especially in the hospitality sector and transport sector, probably this is the time to rebound with Easter. And I think that announcement just before Easter, if anyone cares to do a study, that was like one event that really saw many businesses actually curve. That was extremely, I guess, painful. I think the second one is what we are currently seeing with a new variant, and just as people expecting recovery. And of course, there's this psychological effect that we are going into a new year and now seeing the COVID numbers are up. Anyone who saw today, our positivity rate for COVID numbers was at 22.4%, which is extremely high for the number of cases. And you've all been seeing memes, because I think Kenyans do well communicating through memes. So with the influenza, with COVID, I think this makes, quite a bit of a moment in terms of expectations across the economy. 2 things also I want to highlight is, and I think here globally and how they relate. Globally, we are seeing very high inflation now. And for those who may have missed, places like US, they experience like the highest inflation in 39 years. They hit 6.8% last month, which means effectively they had higher year-on-year inflation than Kenya. And of course, we expect that this is going to roll over into emerging and developing markets. I don't think it's great. And of course, it depends which side you're looking at from. We're in an environment where there's reduced private consumption because income levels have been affected. So with the inflationary pressure, that becomes too much for the household and as we'd call it. Speaking of inflation, two things to highlight. Of course, a lot of the inflation is around fuel and food. On the fuel side, we saw some fuel price pressures. That is, as it stands, the issue of fuel prices is a national issue. We've recently seen the task force by government on energy prices. I've seen Mwango Capital tweet a lot on that. And I want to hope that we're going to have positive outcome that is going to lead to lower energy prices, at least for households, even if it's in power consumption, because that's a very huge component of the kind of pressure people get on spending. But the other one is on the food. Food prices have been on an increase. And by here, I mean food for human, but also like animal feeds. The value chain are pretty much similar. And the drought doesn't help. We know that this year drought was announced as a national disaster. And I think that's particularly bad. I think top of my concerns going to 2022 is actually around food inflation. It's something that is bugging me quite a bit since there's domestic pressures, drought and rain patterns. Then the supply chain, which has been affected, and of course that flowing into like inflation. And I don't know how that is going to work. And of course, something else we have to mention, now we are slightly just over 9 months into the next election on 9th August. So I think psychologically, the political risk associated with the election is going to start kicking in. And what is particularly interesting going into this election, it's a very charged political atmosphere. I think that's the best way to say it. There's a lot of income and financial challenge across the country. And as we know, we even have a huge segment of people who've been pushed into extreme poverty during the COVID pandemic. But also, we are seeing signs of there's going to be a lot of expenditure going into the election. What that means for the money supply in terms of not in the economic sense of the word, but in terms of spending by the political class versus low-income citizenry, I think that is something to observe. So I don't know whether election finance laws will be observed, probably not. But I think that is going to be interesting going to the election. Something I want to comment on, Eric, and probably stop there, is around vaccine. There's been the issue about vaccine equity or vaccine apartheid and everything else that is happening, let me say, across the African continent. I mean, it's really sad that while some markets are focusing on booster shots, we only have 4.5% of the African population vaccinated. And I think there's been a lot of talk about enhancing vaccine manufacturing capacity in Africa. I just read a communique by the AU, I think 2 or 3 days ago. But we all know that these things won't happen as fast as we want them to. If we have our folks from government listening, I think we need more practical approaches to just reaching people faster on their vaccination drive, just to make sure we have as many people getting access to the vaccine within the adult population. So yeah, there are a couple of factors, and Eric, I'm happy to answer any more specific questions on the economy.
I think I'll come back to you later. Let me hear Kwame. Kwame, how is the state of the nation going into an election year? What are your reflections on this year?
Well, I think I should speak about two things. One of them is this year, we saw the full effects of what happened last year. And part of what happened last year was that convergence of supply and demand shocks based on COVID. Part of it obviously was also the state of the Kenyan economy. So I'll say something which is repetition. I think part of it was government of Kenya could not respond adequately because there's just no fiscal space, but more importantly, because what was designed as a stimulus just wasn't sufficient. So that's the background. Now, at the beginning of the year, of course, there's this expectation that the forecast, which usually is, I think people think that economists take those forecasts too seriously, and we should, but not for the same reason that the media and everybody says. I think forecasts are supposed to be contextual narratives. If anybody tells you that they landed in an economics class what next year's growth rate would be, they're lying, or they had should I call it a certificate mutu, if I may use something like that. But the main issue is that it was evident that I think the forecasts at the beginning of the year were far too rosy, 7.1%. It's since been revised down. Our thinking is that, in our view, it will probably be a little lower than 5, or just about tripping that. Because if you look at the first 2 quarters, first one was about 1%, the second one was about 2%. It would take a massive quarter 3 to actually get us anywhere closer to the 5.8, 6% that the Treasury was using to plan numbers this year. So that's the one part. The second part is to come to our belief that if you're going to call something a stimulus, and let me say what a stimulus is in the language of conventional economics, there are ideological differences about whether it's effective or not. But talking about what a Keynesian stimulus is usually that when resources are lying idle, where people don't have jobs and firms are not hiring, it means resources are lying idle. So one of the things that those who believe in Keynesian stimulus say is that basically government can actually borrow money or create credit and actually use that money to get those resources that are idle to be occupied and then to generate value and output. So that's the conventional wisdom. In Kenya, last year, of course, government tried some moves here and there, spent a little bit of money, but our view is that the stimulus effect that came from a fiscal policy response, the bigger one, or rather the only effective one, was a tax cut. So you can do that stimulus in 2 ways. One, by borrowing and spending more money, or 2, which is what most governments in the West and those who had, and I think even in South Africa did. In Kenya, because there was very little scope, debt and everything was already too bad, what government could do was just to provide relief by giving people a tax cut. I think that was a brilliant idea, but of course, the belief that government should grow through spending overcame them, and then at the end of December, it was cut back. But the economy was recovering anyway, because as it became clear that COVID is serious, but it wasn't as devastating.
It must have dropped. I hope it reconnects. In the meantime, I would say we are past the 1 hour mark. So if you want your questions to be featured, just go to a pinned tweet, just below our pinned tweet. You can type your questions there, and then we will take a few of the questions and forward them. You can address them to a specific speaker, or if not, we can ask them generally to let us know. Secondly, also, you can send us a DM. You can also request to speak. It's a bit of an open session today. Along the way, if you feel there are some reflections that you want to share with us about the year and the outlook for going into the next year, it would be nice of you to just request to speak. In the meantime, I'll come back to maybe Kevin. Kevin, you can give us your outlook for 2022 in terms of especially stocks that are trading. Are there also companies that you're expecting maybe to list on the stock exchange next year? And is there anything that excites you about next year in the markets generally? Kevin?
Yes, Eric. So a couple of things excite me in our markets in general. So, of course, the expectation from a trader's perspective or a dealer's perspective is December and January are generally or typically cold or slow months. So when we look at international funds, that extends also to local institutional funds, is a couple of guys organize their holidays around the December-January period. So we tend to see quite some stunted growth or limited activity in the market. But thereafter, we expect to see 4 or 5 active months, of course, in light of the election in August. I think it will be the second week of August. So we expect February, March, April, May, June, and maybe July to be active months, as guys will generally then close off for the year in anticipation of the election. And of course, thereafter, if the markets will be calm, and depending on who takes over and how the country behaves. So Safaricom is one of the big stock that analysts and investors and us traders are keen to watch. At 37 levels, I believe if you've been watching the markets the last 2 weeks, the stock has generally just picked up from the digestion of the Tigray and Ethiopia. So we expect Safaricom to really perform, especially if we're going to see some calmness in Ethiopia. And we know our president is now leading or is in the forefront in trying to bring about peace on that region. I don't expect it to happen overnight, but I think Safaricom is one of the biggest stocks to look at. And one thing I always tell investors and in general, retail or institutional or otherwise, is when you're looking to invest in Kenya, for instance, you cannot invest in Kenya and not be on Safaricom. It's good to have a diversified portfolio, but I think Safaricom accounting for 65% of our total market, you'd really be playing on thin margins if you're not on the telco. So, of course, the big banks are something to watch out for. But the expectation is they're going to announce a dividend this time around. I'm skeptical about that, considering that we have the Omicron now. I think 3 people, I don't know, I haven't checked the numbers today, but it's now in the country. We don't know how the coming months are going to be. It's everyone's guess on how this COVID is going to pan out. So I'd be very skeptical if the big banks are going to issue a dividend. My expectation is they're going to preserve as much capital as possible, and if they need to issue a dividend, maybe pass it through an AGM or something. So anyone there looking for dividends in terms of from their main banks, I'd be skeptical about that. But generally, the NSE has really done well. I was looking at the ASEA, and that's the organization that brings together the African exchanges, and ex-Egypt and SA, Kenya ranks number 2 or 3. We are doing very well. I think the only bosses that have outperformed us have been the BRVM at 35%. But generally, if you look at the stocks in terms of activity, in terms of turnover, we really, really do well. And BRVM, MACU, is an organization of 8 West African countries. Your Botswana, your Niger, your Cote d'Ivoire, and the rest. So NSE has really done well. And I believe that, of course, has been due to the performance of the blue chips, more so the telco and the top 8 or so banks. So the expectation for next year is, of course, we've seen quite some good numbers on the banks, or quite some decent numbers, if I may say. And we foresee most of the banks, I think we've had this discussion a number of times on this space, is we foresee most of the banks closing on a positive. So the performance that we've seen over the 3 quarters of the year, I think is going to be extended over to the full year numbers. So anyone on the NSE markets, do not panic, whether you're on the equities or the fixed income. We've also seen rates generally, especially on the lower end, the 91, the 182, and the 364 generally come up. Of course, we know the debt is a big issue for us, and we expect, I think we're going to be raising around 696 billion over the next fiscal year. So I think we're going to see the government more and more still come into the primary market. And I think that has also hindered, especially from local institutional investors, from partaking in the equities, which is considered to be more riskier. So I foresee that still being the trend from institutional investors, but retail investors have really outperformed themselves, if I may say. We've seen quite some ballooning investments from them, especially when the year was locked down. All these small and medium-sized, the flower farmers, these coffee farmers, all these guys who had some income and could no longer put it on their business due to the risky nature that we were in, especially in 2020 and earlier on this year. We saw some of that capital come into the equities market, which was a big boost. I think retail participation has moved from slightly under 4% to around 7% now, which doesn't look like a big number. It's just 300 basis points. But in terms of value and volume, this has really supported the NSE. Eric?
A quick question from our friend Nderi. What do you think about NBV?
Nairobi Business Venture. So thanks, Nderi, for that question. So NBV, I think I mentioned earlier that today, I think I'd seen it's up 8 or 9%. But it's one of the small cap equities, or one of the small cap companies under the NSE. My personal opinion on it, I never looked at it a few years back until I think around 3, 4, 5 months ago. And I started to like it when I started to see what they actually do, what products they're bringing to the market. But NBV has generally been a retail stock. And by that, I mean that you'll find most of the institutional investors will not touch it. And those that have touched it in just sort of like a shave, just in a little bit. If you look at the owners of the publicly traded stock, you'll generally find it's mostly a retail stock. So the thing with retail stock, or what is synonymous with retail stock, you'll find is that retailers will generally not support the market. And by retail, I mean you and I, the individual investors, will sort of tend to mirror in on the big movement. So if Safaricom is what is moving the markets, then you'll tend to see most people move with Safaricom. Or if it's the big banks, you'll then tend to see most people move with the big banks. The only time you'll see the likes of NBV, your Flame Trees, most of the gems, other gem companies, you'll tend to see the movement in around 1,000, 2,000 shares. And thus, they tend to be somewhat sticky. And that's when in a day like today, when you find 800 shares have traded and the stock is 10% up, you sort of start asking yourself what's happening with the company. But really, for me, it's not one of the stocks that I would actively put on my portfolio coming into 2022.
Kwame is back, so I think I'll take the mic back to him so that Kwame can finish up on what he was saying before.
All right. I don't know where you all lost me, but I think I'd spoken about vaccine appetite, which I thought was a very strong language for what is really happening. So that my belief is that for a country like Kenya, for instance, with sufficient organization of the public finances, the government of Kenya should be able to pay for the vaccination of any adult or minor Kenyan who wishes to take the vaccine. I think it's just basically about how the stuff is planned. And then coming to Forex, my view again is that if you look at it, Kenya's currency has been far too strong, comparing with the fact that I think since 2016, most of the regional currencies had depreciated, some by as much as 21, 22%. Kenya's had actually gotten stronger if you take the real value. And at the same time, Kenya has serious trade deficit. One of the ways in which economics textbooks tells you that should happen is that an adjustment in currency. So an adjustment in the currency value was due. Even if we hadn't had COVID and whatever is happening in the States right now, it was due. I think the policy of the central bank is to make sure that it glides slowly without volatility. That might be supported, but there are people who actually think as well that there's been a serious utilization of existing reserves to actually support it at some preferred area. For a long time, people used to talk about the psychological 100, up to until like a few weeks back, we were talking about a psychological 110. So I don't know how far it'll go, but it was due for correction. And that specifically is what has happened. I think regarding growth, this has been revised. 7.1 were some of the main estimates, informed by the fact that the economy will be growing from a low base, but it's been revised right now. I don't think that it would probably be above 5, but I might be wrong. But if you look at the fact that the first 2 quarters for which reporting has been done, the first one was 1.2, the other was about 2. Of course, there's the 10% number that was mentioned, but the context is that it's 10% against the worst quarter last year. So obviously, if you compare against a very bad quarter in which there's shrinkage, then it gives that impression. But on the whole, I think 5% is probably what's going to be achievable for Kenya this year. Elections, I'm not too sure. Sometimes I actually think that we overstate the political risk that comes from elections in this country. But I think the next one is probably going to be a little different and perhaps not as volatile, because if you split elections in Kenya in 2 ways, one, whether you have an incumbent running, those tend to be more violent elections for very obvious reasons. There are lots of vested interests. And then an election in which there's 2 different people, whether one of them has been in government or not, tends to be a little less contentious, because the perception that the results could be manipulated or systems could be manipulated to direct it tends to be less, regardless of who this happens. I mean, that does. So I think that tends to happen, of course, in addition to the lame duck effect, which we must never forget. What worries me, and this is one thing, that is the confluence of failed rains and high food prices and high inflation and a very potent election moment. I think that's something to watch for. But my view is that it's probably going to be less so, unless people just decide to escalate it, than it was in 2017 and than it was in 2007. Yeah, thanks.
Great. I think now we are more open to questions. I haven't seen many questions coming in, so I think I will still keep going with the guests. Senga has been quiet for a while, so maybe you can give us a little bit of perspective of your business outlook going into next year for your small business and maybe for the small business that you've seen around you.
Okay. By the way, I agree almost 100% with what Kwame has said. And I think in general, I would say I have a negative outlook towards 2022. But for me, primarily, that is driven by just how much money the country owes and its seeming potential inability to pay it, and what that means from what the government expects of businesses and citizens in terms of tax, on top of everything else that's going on. So I personally expect more shrinkage around us. For our business independently, I mean, we're not reducing our projections, if you will. I was just doing projections this week, and our targets, we try to accomplish them regardless of what's going on around. But I'm not expecting a good year in 2022 for businesses or the businesses we serve.
How are you setting up your business then for 2022 if your expectation is that negative?
So I think it alludes to a small comment I made without going into too much detail. Because we've primarily functioned in a strained environment, We're very, for example, cost conscious when we're always trying to think about like, how do you move things cheaply and effectively? And that's become a very big need for the kinds of businesses we work with, where they're trying to find cheaper. And we think we found something that works. So that gives us confidence. We've acquired a lot of customers this year because of that. And for us, we don't want businesses to shrink for obvious reasons, but we have an attractive offering for businesses that are shrinking.
All right. Back to Kevin again. So, in terms of market participation, then are you worried that maybe the foreign investors may not be stepping up to help boost the markets going into next year also? And what are like the kind of things that worry you about the markets going into next year?
If you look at the statistics, and if you even just go back to earlier as 2015, you'll generally notice, and in 2017, so if you're looking at 2015, 2016, and when you had the election, is foreigners tend to stay out, and they'll start doing that if lucky a few weeks too, but generally they tend to stay out a month or two to the election. Of course, we haven't had a good history on our elections, especially if you start back at 2007, 2008, and then back in 2013 and then 2017. So we tend to see some foreign direct investment flight, but generally capital flight to safer havens. And I expect that to be the case towards the coming year. But as I mentioned earlier, December, January generally tend to be the holiday months or holiday season. So we might not see quite some inflow in January, of course, for obvious reasons. Most of the fund managers are not back in the office, and we start to see those meetings of the strategy meetings and forecasting meetings. But I expect to see business as usual in February, March, probably up to around July or late June. And then thereafter, as I mentioned again, it's going to be quite slow up to around, say, November, August, dependent on how the election results and how the country generally behaves. So it's a given that we're going to see some capital flight in the run-up towards the election.
And just to add to his point, even for us, in terms of trying to prepare capital for 2022, we have a very, very strict deadline to do that no later than June, July. So in terms of variables, we're trying to eliminate variables for second half of the year and just basically do all the planning and so on that we need to do in the first half, and then have to just wait until 2023.
It's sad though, like half a year may actually be lost in terms of economic momentum just because of elections. I'm not so sure what we can do. Maybe Kwame can help us out. It's sad that elections impact business to that extent, that business are more like pessimistic about the second half of next year. But before Kwame answers, there's a question here for you, June. Given that you're going to an election here, what would be your advice for startups and the intended growth projections and these considerations of COVID and again an election year next year? And maybe to add on top of that, if you're raising, especially from external investors, they most likely will point out the fact that Kenya is known to be an election kind of hotspot, so to speak.
Yeah.
So how do you convince them to still invest in you? Because business has to go on at the end of the day.
In terms of projections, I honestly don't know how to advise. I think every business thinks differently about projections. I would say naturally the wise thing is to be conservative, right? But as someone literally pointed out to me yesterday, you can have your own internal goals and projections, and your external goals need not be the same. So what I think, be ambitious internally, but in terms of what you may be communicating to outside investors or so on, I mean, one needs to be careful, right? Because otherwise you can set yourself into a trap by overpromising, particularly in a period where you do not have control of the macro factors. And then in terms of raising, I'm generally very honest. I'm not one of those people who sells a fantasy. I've never been, and in Senga, we don't do that. There's always some kind of conversation, even now, around just the macroeconomic environment or the shilling depreciating or what have you. So for us, it's the same as it's always been in terms of talking about difficult things. But again, the other thing is, I mean, businesses are cyclical. Good business people or the average business person knows that. I think it was this year where I was seeing articles talking about, for example, the businesses that came up during the financial collapse a little bit over a decade ago, right? Some of the very big and successful companies we see today started in a period of great economic duress globally, right? So I think from a storytelling perspective, I don't think it's necessarily a bad thing. I mean, again, if you can show that you can do well in a bad period, then you definitely can do well when the environment is lifting you up. So for me, I see some of these things as a selling point.
Good. Ben, maybe your projections going into next year. And you haven't talked about ESG, so I wanted you to also comment about it.
I don't think the biggest factor is the election per se, but I just think the cumulative effect of all these small pockets. So you have an election coming up. You're trying to handle a pandemic and with new variants. We are still having a drought within the country and people trying, to handle that. You're entering a high inflation period. I think it's just the cumulative of all that actually amplify the political and look like a really big factor. And also not forgetting we have the Supreme Court between the 18th and the 20th of January. So I think that was off for the year.
So I'm saying in terms of like investors holding back and capital flights, I think that will also be on the consumption side. We'll see a lot of people holding on, for example, buying durables, and of course that's going to have an effect on private consumption and how much money goes around the economy. So that makes my outlook quite conservative. There are two things I would like to see more, and this is not specific to the country, but I think African economies more generally, because from where I see these are sleeping giants. I think one, and they're creative, and I think how governments are going to maneuver policies to incentivize, digital economy is going to really matter. If you get it wrong on the policy side, government can really become a stumbling block to the digital and creative economy in Africa. I don't know how we're going to unlock that. There was a lot of area agreement, and to be honest, I think it's been slower than many people would have expected. I don't know what should be done, but I think there's a lot of potential around intra-Africa trade and the digital economy for anyone listening. On the climate side or ESG, environmental and governance issues, we are seeing, I think, more and more climate risk across African economy. One, of course, is the drought we are seeing within the Eastern Africa region. Further in the south, if you look at Southern African countries, there's huge exposure to ocean-induced or water-related climate risks in the likes of Mozambique. And of course, we are seeing increased desertification in the north. The challenge being that, while there is a very huge risk in that area, there's very little financing. And I think my focus would be within at least the next 3 years, we're going to see a lot of financial innovation in the green government. We're going to see sovereign green bonds, euro bond coming up. There's going to be a green component, at least as Treasury has said it. And we are going to see a lot of capital raising for the green economy going forward. So my focus for the year is quite conservative. Thanks.
Now that you mentioned something about the green economy, something just occurred to me. Of course, you all understand that there's this very big study by Miguel and Fisman, I think 10 years ago, which shows that droughts in Africa tend to precipitate crisis and insecurity. And so one of the things that I think is a real concern for me about increasing desertification, or at least that the world is getting warmer, my view is that is real. Whether it's whatever is creating it or whether it's carbon or not is a different discourse, is that there's the possibility that actually African societies or governments will become increasingly fragile because of the possibility of internecine conflict. So I keep Africa, generally speaking, about specific countries, especially those in the Sahel, but also in other parts of this country, largely assault areas and stuff like that. So it adds to a political risk for the African continent in general. And I am glad that Ruben thinks that there's going to be innovation for the green economy and to expand and to respond to that. That will be desperately required, and it's something to actually watch as one of the things that will determine that. So that's the first. The second one is just Africa's demography. Obviously, a couple of weeks back, it was FOCAC for China. This week, I think it's Turkey. And of course, India is going to run one, I think, next year as well for African countries. And these cooperation agreements with the largest countries and the geopolitics around it is something to watch as well. Being as lessons I hear, many of them would be concerned and watching African elections as too. So we need to find a way to actually use the opportunity of elections. Because my view is that in fractious societies such as Kenya and all these others, elections will always be very noisy. But business people need to be able to detect the signal from the noise. And my view is those who advise them need to be able to tell them, because sometimes I think they have opportunity on account of fears, which might be very real, but not properly measured in terms of, just the scaling to distinguish between what the uncertainty is and what actually the real risk is. And everybody treats it as if there's complete uncertainty. So for 2022 in Kenya, I think there's going to be elections. Given the nature of the political formations in this place, whatever is going to result is going to be a messy coalition government, which sometimes also makes it very, very difficult for progressive policy to be done. But I think what's going to discipline whoever comes in next year will be constrained by the state of the economy next year. And that's a good thing, because obviously when it comes to that, there are few choices that have to be made. One of those obviously is to discipline public spending. We'll have the difficult discussion about letting go of public assets that are in very, very sad state. So, for instance, I think many of you saw a letter that was circulating yesterday showing that the postal service in Kenya, which has some of the most prime assets in any town in Kenya, top 50 towns in Kenya, is paying October salaries on the 17th, which is today. And that was a letter from the finance manager assuring workers about that. Those are wasted resources that a decent private sector manager, you don't have to be top guys, just a median private sector manager would do fantastic work with. So those are some of the discussions that will have to be made, and whether they're made before the elections or after that, I think it would be a good thing for Kenya to go through that cycle. Thanks.
Well, maybe a question to you, Kwame. Do you feel like we'll have the Zambia moment where we come in and actually realize the situation is much worse than we've been kind of camouflaging for a while?
Yes, I think that the reason it's guaranteed is because government's total obligations, and people may shout all they want to about the IMF and the World Bank. It's actually become clear to us, because we suspected it as the IEA. And our estimate was that the government of Kenya had obligations that were hidden, contingent liabilities, close to about 600, 700 billion, just putting together back of the envelope discussions. If you remember the budget policy statement, which was part of the requirements that were made, I don't know why no members of parliament are actually putting it at 1.3 trillion, 13, 14% of GDP. And we're not over counting it yet. So obviously, whoever comes in with rosy expectations that you're going to dish out jobs for the boys and contracts for them, I think they're going to have to strap themselves quite a bit. So modest expectations are necessary. Whether they know it or not is a different matter altogether. And perhaps that's also a good opportunity for restructuring the state. Thanks.
I think you're starting to wrap up. I would like just go a little bit more personal and ask maybe your personal kind of what you learned this year from a personal perspective, and maybe some books or notes that you'd recommend people to read that you may have read this year. So I think that would be a good place to start wrapping up for the evening. Maybe we can start with Kevin.
Thanks, Eric. I think I've learned this year has been just surviving on little and just saving up as much as I possibly could and investing whatever I don't need. So it's been basically living off on the basics and investing any of the cash I generally use on luxurious goods, or in Kenya, going out and drinking and all that stuff. So the money markets, the financial markets in general have been a very good creator and a very good place to place your disposable income. So I've really invested and gotten a chance to learn, especially with the working from home, looking at the stocks you never looked at before, especially for the life of a trader. We mostly look at the NSE 20 because that's generally where the foreign investors would be, what the foreign investors would be looking at. So we more so sort of tend to ignore most of the other stocks for the retail investors, or some of them for the institutional investors. So I can comfortably say I've looked at, I think, each and every of the 65 listed counters. I've looked at the derivative space. I've done quite some self-training on derivatives. We have created, together with the Nairobi Securities Exchange and a member of the CMA group, that will generally advise the NSE and the CMA, both as SROs or self-regulatory programs, what institutional investors sort of became a bridge between institutional and foreign and the organizations like NSE and CMA. So just talking of regulations on reporting, on data, as you all know, NSE. I think I have an issue with my connectivity. Sorry. Yeah.
All right. You can close later. Let's maybe have June first, and then Ruben, and then finally.
Okay. So you want me to answer the same question?
Just on a personal note, and maybe books and resources that you can share.
Okay. Well, I think my first lesson is that a healthy level of detachment is healthy. And I know that sentence has two same words. I've always been invested in my work, and I've always functioned like an owner, no matter the environment. But when you start something, it's like a different level of emotion that you cannot anticipate and that cannot be explained to you, even if you think you have understood it and anticipated it. And I think this year I learned how to at least separate my personality a bit from the business, and it's been good for me and for the people around me. And then I think the second thing is having the courage to make tough decisions around both the people you work with in terms of team members and also even the customers you work with. So I tend to be very emotionally attached to people, including team members. But sometimes I think you need to know when that is not serving you well. And you need to make maybe a difficult call. And I mean, even with customers, we've had the habit of sort of like suffering with people. And I think this year we've just said we're going to put a stop to that. So even though someone may offer the business good revenue or top line revenue, if we're not collecting and you're not paying us, it literally does not matter how much you're making us. We don't care about the optics of high revenue if you're not going to meet your payments, and just having to make calls and say, okay, like we cannot move forward. But also, I mean, sort of being understanding as well, because for example, as a young company that's gone through a lot, when some of our customers are going through a lot, we just give them grace, because we do know what grace means. When someone gives you an extra several weeks or whatever, or even sometimes months to pay for something. So both being empathetic, but also knowing sometimes when to cut the cord. In terms of book recommendations, I mean, to be honest, I can't remember the last time I completed a book, so I would be totally lying and pretentious if I were recommending books. So I think maybe what I can recommend is the books we are required to read in our company. So there's Lean Startup, which I mentioned before. There's the checklist. The checklist was written by, I forget his name now, but he's a famous like US surgeon or surgeon general. Because we're a highly operational company in logistics where things can go wrong by the smallest breach of process, we try to emphasize, using checklists, but not in the general way we understand them, in the way that people in complex environments like airlines and hospitals use them to effectively save lives and stop planes from falling down. And then the third book, this one was a book we discovered this year, The One Thing. I strongly recommend it. The One Thing, I think, is a game changer, both on a personal level and as a professional, in terms of understanding what literally the word priority means and how to plan. So effectively, it says there's no such thing as two priorities. You just have one priority and you figure out what it is you're going to accomplish towards that one priority. It just simplifies things and enables one to also come up with solutions that are, I think, sweeping. It sort of helps with also addressing things at the root cause versus symptomatic things. The fourth book I would say is High Output Management. That one is not recommended for, even we've bought the book and anyone in the company can read it, but if you're a manager, you must read it. And I think that one, it's good not just for managers, but for really each individual. That one was written by Andy Grove, who was an Intel CEO who passed away. And I think particularly for young people in a very competitive global environment, people do need to be conscious that they're not just competing with themselves or the people within their immediate team in the company or other companies in the ecosystem, but it's a globally competitive world. And we all must function that way if we want to survive into the future. And then a book I was recommended to by actually Faris Karaoke, who's on this Twitter space recently, is From Impossible to Inevitable. It's an awesome, awesome book. I needed to interview someone last week. One of the biggest areas that at least for me, that I've found that is difficult to sort of attack, if you will, for lack of a better word, is sales. I find building a sales force to be an extremely difficult thing. And this book just helped me like very, very quickly home into what we needed, asking the right questions and things like that. That would be my book list. Thank you.
Ruben and then Kwame on the same.
Thanks, Eric. I just wanted to respond to or add to two things that had been mentioned earlier. I think one, Kwame had mentioned about the importance of focus and how different people view different things. And I just wanted to add emphasis, at least for policymakers, focus matter a lot. Some of you might have missed, but 2 days ago, Brazil decided to kick out the IMF permanent rep because they disagreed on the growth forecast for Brazil. I think the IMF said it contracted by 9%, and the government account said 4%. And the decision was they just said, once his term is over in June, he should leave. The IMF said, okay. So, I mean, this just showing that forecasts can be quite a sensitive thing, making close full country missions. I think, Kwame, you also mentioned about like fiscal space. And I know that was mostly from a national government perspective. But I also wanted to add, I think one thing that is also happening in terms of a lot of fiscal mismanagement is also in the counties. I attended the Devolution Conference and I got to speak to a lot of people in the counties, including governors. And I was very keen, and I just realized even how the conversations talking to like first-time governors and like second-time governors, there's a lot of apathy in the second-time governors. It's mostly, there's a lot of, at least what I could pick, there's a lot of concern about the 2022 election and, probably where they're going to be. I could tell the conversation first-time governors, they're more keen on where they want to see the counties. And even if they want to be re-elected, they're thinking about continuity. So I think the mismanagement we are seeing, if we shed enough light on the counties, we'll actually realize there's a whole lot of fiscal mess happening in the counties. Two things I wanted to mention in terms of demography, and there are two things that concern me in this country. I think one is we have a very huge talent pool. And of course, like today, there were graduations and all these people going into the job market. But also, if you look into the job market, we are very highly service sector economy. But also, if you look at the quality of jobs, many of the jobs we have are actually low-skilled jobs. And a lot of them are even domestic, so they are not tradable per se. So just being at that intersection where you have very low-quality jobs in an economy and a lot of knowledge workers, then it means there's quite a bit of supply-demand mismatch in terms of our labor market, and our labor market is far from optimal. So just putting that out there, and that's why every few days on Twitter there's something, topic being discussed about how people want to leave the country and all that stuff. So anyone looking into areas to look at for the economy, I think Kenya's labor market is an interesting place to start. Around manufacturing and industry, GDP services. And I think there is still a lot that needs to be done on the industry or manufacturing route. I mean, I've seen a lot of countries saying, oh, we're going to set up vaccine manufacturing plants. We've seen, like, for example, agreements, MOUs with BioNTech, with Rwanda and Senegal to produce mRNA. And sometimes I just ask if there's appetite for vaccine manufacturing, then there's a whole lot more things that we could potentially manufacture if there wasn't a pandemic. So and here I'm just putting these thoughts out there, something to think more keenly on how we can build manufacturing and industry sectors, far from the over reliance on service sector. So those are my parting shots. In terms of recommendations, this time of the year, Eric, from 15th of December, I'm less reading and more watching and listening. One recommendation, this is very personal, that I like, whether you celebrate Christmas or not, I think they are great. I recommend listening to Pentatonics. I think they're a great music group. And if you like Christmas carols, I think they do justice to it. And even if you don't celebrate Christmas, I think Pentatonics is a great group to listen to. In terms of books, I think a good autobiography I read this year is called The Ride of a Lifetime by former CEO of Walt Disney, Robert Iger. I think it's a fantastic autobiography by a business leader, which I would highly recommend, The Ride of a Lifetime. And I think one more book I would recommend, especially if you work in the knowledge economy or service sector, is Deep Work by Cal Newport. I think it's an interesting look of how to deal with distraction and all this demand for our attention when sometimes you really want to get some work done. So Deep Work is amazing. And I think the last two recommendations, because I like podcasts a lot, one would be, listening to his newsletter. He has an amazing newsletter, which I really like. I mean, top-notch ideas. And for those who follow Naval, he has very unconventional ideas, which I think is great. And lastly is one of my favorite podcasts by Tim Ferriss. He brings on very many guests, and for each podcast, he has a really good, like, top down of what the topic of discussion is. So yeah, so Robert Eager, Ride of a Lifetime, Deep Work by Cal Newport, Naval, Ferris, and listening to music by Pentatonics. Thanks.
May I add another book? I totally forgot this. If there's one book I had, if I could recommend one book and not any other book, it would be, this is for business people. It's The Innovator's Dilemma, or its follow on, The Innovator's Solution by Clayton Christensen, excuse me. I think it's the most important business book ever written. So that's, I think, the one overall book I recommend to anyone who is either starting a business or who is running a business. And when people hear about disruption theory and those sorts of things, disruption is a word that is often incorrectly used. This book explains exactly what disruption is and the different kinds of disruption and how to think about disruption. Like, one of the key takeaways, for example, is even if you're a disruptor, the moment you start your organization, you're the one who's going to be disrupted. So you effectively cannot disrupt yourself, right? So it really influences how one thinks about not just entering a market, but also sustaining competitive advantage.
Christensen is such a great writer himself. I know he's influenced a lot of the people who ended up forming tech companies, so they read a lot about him. So that's a really good recommendation. I think he is the one who came up with some of the brilliant ideas, some of which are like network effects, some of which are also been the basis of some of the social media networks that you've seen out here. That's a really good recommendation. It's on my to-read list, and some of the books that you shared also. I think we'll compile them and share them perhaps tomorrow. I think Kwame is having some serious issues. Kevin has some recommendations.
Thanks, Eric. First, I'd like to tell Ruben that I'm also a big fan of Pentatonic, and they do an amazing job, especially on Christmas carols and everything. They just recompose songs or sing their own naturals, and it's amazing. I love them. And then one of the things I've been asked quite frequently throughout 2021 has been on Forex. People want to learn Forex, trading, and all that stuff. And guys ask me how, for a novice, how would one then get to learn about it? I think one of the recommendations I've given people, and I've seen quite some positive feedback on, is a YouTube channel that's called Baby Pips. So baby, then PIPS. So just Baby Pips. And it will just teach you from learner to a sophisticated learner. So that's one thing that I've really enjoyed myself this year. When it comes to the books, I think my all-time favorite writer still remains Benjamin Graham. I really love The Intelligent Investor. I've read it, I think, 3 times. I find myself reading it every time I'm bored. And for those who don't know, The Intelligent Investor is about generally value investing, which is focused on generally steady long-term profits by ignoring the current market and picking companies with high intrinsic value. So Benjamin Graham is one of the guys I've really enjoyed. My second recommendation would be a book called Blue Ocean Strategy. So this is a book written by 2 professors, Chan Kim and Renee. I think she's French, Renee Mobo, or Mobo. I don't know how to pronounce that name. And the Blue Ocean Strategy is not just for guys in the stock market. This is a book for anyone wanting to do anything, especially people in business. So this is a book that shows you how to create uncontested market space, how to make the competition irrelevant, how to create and capture new demand, how to break the value cost trade-off, how to align the whole system of a firm's activities in pursuit of differentiation and low cost, and so on and so forth. So this is something that I've felt while reading has also really transformed me. So my final book that I've read this year is a book called Execution. Again, this is for business people. And this is a book written by Larry. This is the former CEO of Honeywell. For those who don't know, Honeywell, this is a registered company in the US that primarily operates in 4 areas of business, and that is aerospace, building technologies, performance materials, and productivity solutions, or safety productivity solutions, or SPS. So the former CEO, Larry, wrote this book called The Execution. And this is a book that will generally show you how to connect your clients to yourself, how to sell out there, how to go about your deliverables in a timely and fashionable manner, how just not to copy and paste, how to create and reinvent things. So he's very good in this book, The Execution. And you can find all these books on Amazon where I got them. So those would be my three top books.
It's unfortunate we may not be able to have Kwame back. For me, the books that I've read this year, I intended to read 52 books, but somehow I've read only 7, so it's quite an ambition. But I think I've read a book on a recommendation from a friend, a book called Oversubscribed. It's about building really good audiences. I think the subtitle is How to Get People Lining Up to Do Business With. I've also read a little bit. If you want an investing book, The Psychology of Money is very light. It's a light reading with very good and actionable thoughts. It's around 12 chapters, and each chapter is actually separate, so you can start anywhere and start reading. And some of the thoughts you get from the book is about just, instead of trying to beat the markets, selecting individual stocks, just invest in maybe an index and then you'll be okay. I'm reading a book called Outsiders. There's another book, but I've forgotten a little bit. I really like startup stories. I like breakthrough stories where like they were struggling for a while and then you find this one moment, something works out and then they're able to do well in their business. So I think that's I recommend that book. And I would also second Kevin's book, The Intelligent Investor. It's really written in a bit older language. So I think if you can find even a summary of it, it's a good book to read also. Now we'll go to closing comments. So I'll start with Ruben and then Kevin and then June in the end. Ruben, closing comments.
Yeah, my closing comment, I think I'd like to direct it to Mwango Capital. I think this is a good platform that you've created, Eric and team, to help us connect on African markets. So mine is to say good job and kudos to you and your team.
Thank you. Kevin?
Thanks, Eric. So my closing comments generally would be just to wish everyone here, to you and your family, to you and viewers, just to wish you a good health, especially during this pandemic and the flu that we've been seeing going around. And going into a festive season, of course, we're going to see quite some menace on the road. So just drive safe. I hope you're safe. I hope you and your family are safe, and glad tidings and happy holidays.
June, you can close up for us. Kwame is not able to rejoin, but he'll send a list of resources that he wants to share with us, and is very grateful. June?
Okay. I think, as you know, I really dislike NCBA as a bank, but they have a really great slogan, and it's go for it. So I would say go for it, no matter what's happening next year with the elections and whatnot. And also, good night and thank you.
I think maybe just to second June, that is also a slogan I've really used almost the whole of this year in the last. So the go for it slogan is something I believe in. It's something I love. I'm indifferent about NCBA, the bank. I've worked for them and I bank with them, but there are also things I don't love about them. But the slogan is really, really good, and for everyone, just go for it.
Great. I think for banks, June has an entire essay, especially NCBA. So I think you should check out that. But I think banks ought to behave better. I think that's especially the recent issues I've seen on social media. A lot of banks are really not treating their clients well. I'm happy at StanChat myself. I hope all of you can come there also. But anyway, that said, thank you so much for joining us in the spaces this year. It's amazing that you actually started the year with around 20 followers and you're finishing with almost 11,000. It speaks a lot to the kind of community that we created, and mostly because we just stepped out and just went and did it. And somehow along the way, we've been joined by amazing people. And it's really nice that some of them are the speakers here. Ruben, Kevin, June. Kwame has also been there. Sud is in the audience. Boniface, I told him at the beginning of the year, let's write a small newsletter. I think the first newsletter, we sent it to 5 people and they liked it, and then we expanded it, and now we're at around 450 people at the end of the year. We started off with Boniface, just writing stuff, and the people came along. I see also Fares, so one of our early speakers. Namsia, we partnered with her a lot on trainings. And also, I see Ben Roberts. He was also one of our early speakers also. I see also Eric, a fellow worker at Mwango. He joined us in June. Becky is not here with us today, but she works a lot in the background to make sure that the Twitter spaces. And I think also something else that we also want to do is to write out what our reflections have been in terms of making Twitter spaces. We've learned a lot to actually make the quality of spaces that we've had this year. We've had to rely a lot on processes, and those kind of processes are really good to share with others so that you can learn. We are an open learning platform, so we really enjoy it when others learn from us, and also we learn from them. So in the end, also, we're very, very grateful that you've been joining us for the spaces every Friday. We want to take a 2-week break, and then we'll be back early next year again with a really nice list of speakers. We have like a really packed first half of next year. But we also have really great hosts. What we're doing also is partnering with some people. They can be hosts to the Twitter Spaces. It's just a platform that we created. We don't own it. We love it if you also come and partner. We also have Saturday reads, by the way. So if you want to actually share some of the resources that you're reading, just ping us and we'll definitely do a compilation of them. And so we take a 2-week break, but we'll be back. The platform will keep going. We'll keep sharing all the information and the lessons that we learn. What I wanted to say is really, really grateful that you've been able to join us this year to build Mwango to where it is. So from our hearts to yours and from our home to yours, we want to say a big, big, big thank you as the Mwango Capital team. Be blessed and see you again early next year.